This is our Forex blog for June 21st, 2011. And, in most of the pairs, there was a pretty choppy day. However, there was weakness in the dollar on all time frames for a few hours last night, and then from about 5:30 onward. So, you want to sell the weak dollar, which is weak on all time frames, against some of the stronger ones. Today, the most consistently strong currency was the CAD. Just flat out strong all day, and for the most part the dollar was weak. So there was glimpses of high probability trades to be had. You can see this was underneath the hourly, and it broke down as of yesterday morning. Kind of went sideways from that first drop down. Here's all the high probability trades, kind of like a flat top, multi-hour sideways range breakdown, and you can see it fell without that much statistical weakness. When currencies come back up to the hourly the first time and usually the second, it's a pretty high probability place to sell. This one wasn't quite at that level, so it's debatable whether anybody would have actually taken that trade, but it was within 3 pips, so there's a nice little 20 pip move here. And then again, a multi-hour sideways range. Other than this move up, it never really made any move up at all. This is a pretty high probability place to sell as well. And usually when a currency is this weak, it's going to go down to the fib target. So you can draw your fibs on there. You can see my 1.618 fib target I drew last night was a very high probability profit target if you wanted to get into this trade here or here, and just set your stop 20 pips up and then 50, 60 pips down, and just not watch it. Or you can continue to just keep taking the trades. Here's another pullback right underneath the hourly, right near the weekly pivot, right at the previous day's low. Another high probability place to sell, and you can see again it fell. Now if you're scalping, you have many opportunities to make a few pips, 10, 15 pips, 10 pips, and this last one was 30 pips. When it's underneath the lower band, usually it reverses back up, and I'm recommending everyone put the 3.0 containment bands on their charts now. Rarely does price go and stay under the 3.0 band. So if you put that on your charts, when you see, I like to make them green on my chart, when you see those good places to get out of the trade. Now in this case it didn't quite hit it. It looked like it probably would have, but not quite. It was probably 10 pips away from that area. But this is way underneath the lower containment band, right at major fib support. Good place to get out of that trade. Again, the CAD was very strong last night. The pound was weak until maybe about 10. Never had really any strong strength whatsoever. So you might have also, sold the pound CAD. It's not a unreasonable thing to do, and it's very likely to have a smooth trend, as you can see. And here's one of our 2 entry methods. I mean, we teach a lot of different systems, but they're all based on finding the likely direction and then getting into it on either a pullback or a sideways range, anywhere from 30 minutes to 2 hours. In this case, 1, 2, 3, 4 hour, and then down. And this is not one of those currencies where I draw fibs on each night, but you can do it yourself, have an idea where your profit target is. This is a reasonable profit target right here at 5,800. I always put my profit targets 5 or 6 pips above it if I'm not going to be watching it. And so you could have gotten short there with your stop right above the high, 78. 15 pip stop with a profit target that's 65, 75 pips away, and this one just kept going. So you can either use that as a way of exiting, or you can use our new IntelliStops. Phenomenal way of exiting the strongest trends. As you can see, this one also was also a very high probability entry, and it kept you short until about right here. If you shorted this next move here, it kept you all the way in here down to the low. So there's 2 good trades if you use this as your exit. The yen had bits of strength and weakness. The weekly and monthly trend is up. So if you wanted to kind of wait for the weakness to go away and some strength to come in at 4, you could have been looking to buy the yen against the weakest one. It might have been the Swiss. The pound possibly, because it was also weak. So pound yen at 4. And today, obviously was a pretty horrible trading day. Most days it's a lot higher probability in this, but coming up to 4, when the yen was starting to get some strength, and the pound was never strong, it just happened to be above the hourly, and you also have a multi-hour sideways rectangle right here. This is a very high probability trade, and you can see it, fell 10, 20, 30 pips, and who wants to bet it went right to the fib target of the previous wave? Maybe not quite. A lot of times I don't use the wicks on moves. This was, if it shoots up real quick and comes right back down, a lot of times you have, oops, that's not drawn correctly. So it was a few pips away from it. If you want to add padding to the bottom of your charts to see where the fib profit target is, it's very easy to do. You can just put 20% here, whatever the range is, it will add that to the bottom. If you do the same for the top, you can see where these levels are. And this is a perfect example of why I like to add 5-6 pips to a level. 61, that'd be 66. It's debatable whether that even got hit, being 5-6 pips away. But that's why. There's nothing worse than having a stop that got, was just a pip, 2, 3, 5, even 6 pips away from your target. By being greedy and trying to catch every pip, you oftentimes, miss the whole thing. Now, another one that was strong last night was in New Zealand. Very strong across the board. And at that time the dollar and the dollar and yen were the weakest ones. So the New Zealand dollar, very high probability one to be buying. This one also broke above the hourly yesterday. Notice the first pullback here. And it's not going back underneath the hourly. It's not breaking the monthly pivot, which is the average price of the previous month. Monthly pivots are more better support resistance than weekly pivots, which are obviously better than daily pivots. You can see, this shot up. It also probably was a 50% retracement of this move when it did pull back. Actually, this one right here was 50% retracement. And then it pulled back again. So you got all this areas of support right here. You might have taken that trade here. And any time a resistance area, which was my fib area before, which was here, here, and here, anytime it gets hit 2-3 times, it's very likely to go through there. So, if you got into this trade right here, it's pretty high probability. It was even a high probability flag pattern right here because there was no pullback whatsoever, and this area got hit so many times yesterday that whoever was planning on selling it after they realize it's not going down is not likely to be selling it there. That's why you can buy and sell support resistance areas 2 times, but the 3rd time will get you killed. These are so close together it's debatable that that's the same zone. But the first time it got hit, kind of the second time, if you did sell it this time here, you made money, but I'd never sell it the 3rd time. And of course, any area that gets hit 4 times, it's very likely to pop. Your minimum profit target, probably 80% of the time, is the fib target of this move. So you're risking, 10 pips to make, where are you long right here at 13, 11 pips to 17 pips. I would have, if I was in this trade, gotten out of it somewhere in between the first 2 fib targets. Swiss, very choppy, some strength, some weakness. If you have a currency that's choppy like that, it's always best to trade it in the direction of the longer term trend. So, at 530 here, you saw some strength. Not a bad thing to be buying it because the longer term trend's up. This one has some brief strength, which 530 goes weak, also in the direction of the longer term trend. So, dollar Swiss is a very high probability one to be selling around 530. On a choppy day like this, where most of them are range bound, let me bring up the dollar Swiss. 530 is right here. This one had a false breakout over the hourly and came back down. Pretty high probability place to sell right here at 41. And this is using our much faster real-time IntelliTrend fast statistical tool, which shows you the real-time strength or weakness on whatever time frame bar you have it on. In this case, it's a 15-minute. So this was going up initially with some strength, but then the strength fell off a cliff. So if you sold the hourly right here, it barely came down even 10 pips. You can see some weakness here, not much strength other than this one bar. You'd have to, if you had your stop above the hourly, if you saw a bar that had some strength like that, you might want to move your stop down. And then it came down with some weakness, and then the weakness disappeared. So, after being in a trade that's not going your way for 20-30 minutes, you might want to get out of the trade with a few measly pips profit. Comes back up to the hourly again without that much statistical strength. You go short again, very, very tight stop, 6-7 pips max. And in this case, initially it has some weakness, and then it kind of slows down. There's a little bit of strength here. You move your stop down, locked in a few measly pips, and it comes down again, and again, it loses its weakness. See right here? There's almost no weakness anymore. So, on a crappy day like this, you might want to just take your 10 or 12 pips and be happy with it. But weak currencies typically find resistance at the hourly, and they're a very high probability place to sell. In fact, one of our tools, which I don't even go over that much anymore, I think it's called moving average pullback. You can get an audio or cell phone alert when the hourly moving average gets hit, just so you don't miss them. If you don't want to be watching your computer, if you put that alert on the dollar Swiss here, looking to short here, you could go away and do something else, eat breakfast, have some coffee, watch TV, whatever, and when you get that alert, come back, put the trade on. You had 15-20 minutes here before it really started to go down.